It's a substitute for gold, a store of value. Gold is a $15 trillion asset. It is a new asset class. How big could that be? If this new asset class with low correlations of returns and risk relative to other asset classes, all fiduciaries have to look at this new asset class. And so we think it could become, 2 to 5 or 6% of portfolios. It's also an insurance policy in emerging markets.
Bitcoin isn't just a hedge against inflation. It's a wealth-generating asset class that is set to dominate 2 to 5% of institutional portfolios. That's the latest word from Cathie Wood, CEO of Ark Invest. Bitcoin represents a new asset class with low correlations to traditional markets. This makes it an attractive option for investors seeking diversification. Cathie believes Bitcoin could eventually make up 2 to 5% of institutional portfolios, acting not only as a hedge, but also as an insurance policy, especially in emerging markets. Make sure to stick around until the end of the video as Cathie Wood reveals more important outlooks. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now, here's Cathie Wood on the current state of the market.
Here is an exciting chart. We hit and crossed $100,000 on Bitcoin this week. That's a big deal. As many of you know, we've been involved with Bitcoin since it was $250 in 2015 when we wrote our first white paper on Bitcoin in collaboration with Art Laffer. And I remember back then saying to Art when he said, "This is what I have been waiting for since the gold window closed in 1971. And I said to him at that point, I said, and remember, Bitcoin was $250. I said, "Art, this sounds like a big idea. How big could it be?" And he said at that time, "Well, how big is the U.S. monetary base? That's the reserve currency of the world. This seems to be the new reserve currency of the world." I said, "Well, back then it was $4.5 trillion. Today it's about a little over $7 trillion. Well, crossing $100,000 today took us to roughly $2 trillion. So we're well on our way. But as we were talking, and of course, I've kept this conversation live with Art Laffer, he has come back to me and he said, "Well, wait a minute. Before 2008, the monetary base was $750 billion. That's all we needed for the reserve currency back then." And what we've gone back to say to Art is, yes, if we were just looking at it as the world's reserve currency, you might be right. But we're looking at it in many other ways as well. It's a substitute for gold, a store of value. Gold is a $15 trillion asset. It is a new asset class, or as we named our paper in 2016, the one we did in collaboration with Coinbase, ringing the bell for a new asset class. How big could that be? If this new asset class with low correlations of returns and risk relative to other asset classes, all fiduciaries have to look at this new asset class. And so we think it could become, 2 to 5 or 6% of portfolios. It's also an insurance policy in emerging markets for populations who are used to, whether it's corruption or, inexperience or what have you in terms of fiscal and monetary policies, but, collapses in currencies and outright confiscation of wealth or capital controls. So this is ideal as a hedge against those scenarios, and even for high net worth individuals around the world. You never know, you never know what's going to happen out there. So insurance policy. So this is a very big idea. And we are looking forward to sharing more papers, not only about Bitcoin, but also about the two other digital asset revolutions, the financial services revolution, and more broadly encompassing, including Bitcoin, the digital asset property rights revolution. Now that is a big idea. With the election, before this moment in time, I was talking about, okay, gridlock, nothing's going to happen. Now with the results of the election, we can see a lot of changes. And I think the biggest one, and what we just illustrated with nuclear power, is regulations, getting regulations out of the way. We obviously need regulations for the safety and well-being of individuals and so forth, and absolutely agree with that. But the regulatory environment is a morass now. I mean, when you put people in positions as regulators and they start building their empires, you get more and more regulations, and it's really had a stranglehold on businesses, especially small and medium businesses. So we think those shackles are going to come off. We think the biggest regulatory changes are going to happen because SEC Chairman Gensler is going. He's announced he's leaving on January 20th. So the digital asset world, we think, is now about to take off and thrive. And then, of course, while we haven't heard anything about Lina Khan at the Federal Trade Commission, which that commission has been an obstacle to mergers and acquisitions during the last 4 years, to such an extent that it has really harmed innovation. Certainly our strategy is an example of that, because large companies have not felt any pressure, competitive or otherwise, because of the regulatory stance of Lina Khan and others out there, to investigate new technologies, actually buy companies, and establish a price. These are strategic buys, and they telegraph to the world how much innovation is worth from a strategic point of view. Well, we haven't seen a lot of that. There's been a dearth of it, and we think that's going to change. So we're going to have a lot of price discovery. And we know also that at the Department of Justice, President Trump is bringing in people who are very pro-competition, and they are looking at sort of quasi-monopolies out there as being not so healthy for growth in the U.S. and global economy. So I think we're going to see a lot of freeing up and a lot of M&A. There's pent-up demand for it. And we often say that we don't want the companies in our strategies to be taken out. We think they're pure plays and have miles to go. But what we do want is price discovery out there, and we've lacked that for the last 4 years. Another important initiative, so important, is known as Doge. We mentioned it, I think, on the last In the Know. So the Department of Government Efficiency, headed by Elon Musk and Vivek Ramaswamy, we think is going to be extremely important in terms of streamlining businesses. And it has been fascinating during the last month or so to watch them evolve their strategy.
State Duma Deputy Anton has put forward a proposal for Russia to create a strategic Bitcoin reserve, according to RIA Novosti. In an official appeal to the Russian finance minister, Anton requested an evaluation of the feasibility of maintaining Bitcoin reserves in a manner similar to traditional state reserves. Anton's appeal specifically asks Minister Silvanov to assess the viability of integrating Bitcoin into Russia's financial reserves and, if deemed feasible, to present the proposal to the government for implementation. More and more countries are considering the potential of Bitcoin as a strategic reserve, and this will only drive its value upwards. Now let's go back to more valuable insights from Cathie Wood.
We've got a long way to go, and we're very excited about this. Now, what does this mean for interest rates? You can see the 10-year Treasury yield, and I'm going to go back to this chart just to illustrate this as well. Despite this very close correlation, a high correlation between this measure of metals to gold and interest rates since the 08-09 crisis, we've seen a breakdown of the relationship recently. And we think it will re-engage, and the truth will be somewhere in between. We'll need to see some cyclical dynamic here. And as I mentioned, it's important that the president and his team make very clear, when these incentives, tax cuts, regulations coming down, and others are going to kick in, because if they're not going to kick in anytime soon, we could see a lot more cyclical weakness. But if they're going to be retroactive and will kick in rapidly, okay, now we're talking. And we think if that's true, this purple line will start going up. The combination of metals prices going up, maybe the gold price going down, because gold price going up has been a flight to safety in a very uncertain period. And maybe we'll get interest rates down a little bit more. But if we go back to the long-term history of interest rates here, you'll see that the decline, the secular decline, was from very high levels and was a very good thing until it wasn't, because here at 2020 and 2020, what the long-term interest rate was discounting was the possibility of an outright global depression, a deflationary bust associated with COVID. That would not have been good. And so where will equilibrium in this new world be? If we're right and real growth goes up dramatically, say to that 6 to 8% range, but inflation keeps coming down, we could be back to an environment where long rates will be in a consistent way lower than short rates. Short rates might go up to that 6 to 8% range, but long rates, looking at the deflationary ramifications of innovation, long rates could be much lower, as they were during the 50-year period that ended in the Roaring '20s. Long rates were about 100 basis points below short rates for most of that time, and at times were down 500 basis points below short rates. Why is that period important? It is because that's the last period where we had massive innovation, multiple innovation platforms evolving at the same time: telephone, electricity, internal combustion engine. We haven't seen multiple platforms evolve at the same time since then, until now.
We're entering a time of rapid innovation, much like the period that led to the Roaring '20s, where multiple innovative technologies like electricity, the telephone, and the internal combustion engine reshaped the world. According to Cathie, Bitcoin is a part of this new wave of innovation and is likely to have an important role as a store of value. As more institutions and individuals look for alternatives to traditional assets, Bitcoin is set to benefit massively in the coming years. Anyway, guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.